My name is Laura Elkin and I'm the Portfolio Manager for AEW UK REIT plc. I've been part of the portfolio management team for AEW since it IPO'd back in 2015, firstly as Assistant Portfolio Manager and as Portfolio Manager since 2019. I've worked in the commercial property industry for some 17 years now, firstly qualifying as a chartered surveyor and for the past 12 years with a focus on investment markets. AEW invests in UK commercial property assets in strong commercial locations with a value investment philosophy. We invest across the whole of the UK commercial property universe, so we are not sector constrained. In terms of returns, AEW pays out a high income return, so we've paid a dividend of 2p per share per quarter now for 31 consecutive quarters. We also deliver an attractive and competitive level of total return as well. AEW looks to buy assets in strong urban locations that are at a lower point in their value life cycle, and this often sees us buying assets with shorter leases that we can acquire for high yields. Now, this often sees our asset entry prices being lower, and we seek for these to be in line with alternative use values or vacant values. This creates downside protection for our shareholders built in, but also adds important optionality into our business plans. It means that our business plans can adapt with market conditions over the asset hold period. We like to buy assets counter-cyclically as well, and this has seen the portfolio's sector weighting exposure vary over time. Some 24 months ago, we had the highest weighting to the industrial sector, whereas over the last 12 months, we have taken risk off the table in offices and built a stronger position in retail, where some years of pain have created selectively some quite deep value opportunities. An example of this is an asset in Bromley that we acquired in Q4 last year. The asset was bought with an initial yield of 8.7% and is let to Next. Next are known to be performing well as a retailer on the whole, but from this location specifically, we know that they trade very strongly as well. The asset was also bought with a capital value per square foot in line with residential values in the area, and therefore we have a sustainable high income stream, but also capital value protected as well. At AEW, we've got a strong belief that in order to efficiently enact a value strategy, it needs to be unconstrained by sector in order to maximise returns. And when we look at our property level total returns, they have outperformed the MSCI index across all sectors in the 12 months to June 2023. Now, this can be attributed to our low and selective acquisition strategy, but also to our in-house asset management team, who really form the driving force behind our performance. They take a very proactive approach, and in each geographical location where each asset sits, they get to understand the micro location and the exact supply and demand dynamics that operate there in order to work with tenants to grow and lengthen income streams. From time to time, we also improve our assets with refurbishment and with ESG initiatives as well. AEW offers the most stable dividend of the UK diversified REIT peer group. We have paid our dividend of 2p per share per quarter for 31 consecutive quarters. The company has also achieved the highest NAV total return from that peer group over 1, 3 and 5 years, with our 5-year annualised NAV total return being 9.8%. The company's shares also regularly trade at the narrowest discount of this peer group.